Hello, I'm James Robinson, and this is the third blog in the Extrinsic Value blog report. What I thought I would talk about today was how our portfolio performed in January, how my portfolio performed in January. So the good news is January was a positive month for the fund on a number of fronts. In terms of absolute performance, I was up 1.4% for the month. This equates to a compound annualized rate of return of 16.8%, which is above my goal of 15%. This is despite being beginning the month with only 72% of my funds invested, so I made 1.4%, with 28% of my money in cash earning me nothing. If I had been 100% invested, I'd be looking at a 23.3% annualized return, which obviously is very much in excess of my goal, and I'd be happy with. I figured I should talk about how I define my performance. In charting my results, I needed to standardize some way for measuring my performance. It's not as simple as it might sound because every month I tend to add money to the portfolio. The added money, if I simply gave you the portfolio's increase in value, would be skewed because the initial investment wouldn't be representative going forward through the years because of additional months, because of additional deposits. So I needed an absolute way to keep track of my results, which was not skewed by adding funds into the numbers. What I decided to do is take the total value of my portfolio January 1, cash and stocks, and divide that by $10. That gave me a number of shares that effectively I would own or would represent my holdings at that time. If on subsequent days the total portfolio were to go up or down, I could simply divide the new portfolio by the number of shares and come up with what I'll call book value or share price for book value for my portfolio. And in that way, if I wanted to add money, I could simply buy more shares at the current market price, and the stock would be a fair way to approximate my results. So when you see my share price number, you will know it has been adjusted for deposits or withdrawals from my account. So it should be a fair way to record my results. So position reports. This was a good month in terms of my positions. I had 4 stocks this month which converted from active purchases to long-term holds. And to recap, I try and own, my goal is to hold 15 stocks in what I call my active portfolio. When any of those stocks go up 15%, I sell my original investment and the profits stay in that stock and become a long-term hold that I try and forget about. So my goal is to find companies that are going to go up in a reasonably short period of time, 15%. And when they do, I reinvest that money in some other stock and long-term hold that position, the profits, 15% in profits. So this month I had 4 stocks that performed, that did that. Those 4 stocks were Delta Airlines, Value Line, Waddell & Reed, and Gilead. So I want to be clear that those stocks didn't go up 15% this month. It was just that this month they crossed the threshold of a 15% return or better. And so those profits now represent 3.6% of my funds, and it's sort of just grown the portfolio. So Waddell & Reed I had held for 106 days, Delta Airlines I held for 89 days, Value Line for 103 days, and Gilead I held for 43 days. And on top of that, I earned some dividends while I held these stocks. And you can see that, I made about 16.1% to 17% on those stocks. I'm really happy with how those stocks performed. Second part of my position report, when I moved from the 4 stocks, which I was able to, move to my long-term hold, that meant I had 4 openings in my portfolio, and over the course of the month I bought 6 stocks to replace the 4 that I sold and to round out and give me a total of 15 positions. I actually started January with 13 positions. So the 6 stocks that I bought this month were IBM, Union Pacific, H&R Block, Eagle Pharmaceuticals, Sanderson Farms, and Saga Communications. Cash report. Over the course of the month, I added cash to my portfolio in the form of additional investments. I deposited the equivalent of about 2% of additional funds. Those funds were used to purchase more shares at what I'll call that day's book value, as we talked about earlier. I only had 2 stocks in the month pay a dividend, and the amounts were pretty negligible in terms of adding to the cash on hand. I did, however, put a lot more money to work in the month. When I started the month, I had a cash position of 28% of my portfolio. By the end of the month, that position was down to 12%. And again, my goal is to be virtually 100% cash at all times. But I'm closing in on that. So it may seem counterintuitive, but I don't really consider the act of buying or selling stocks to be what I do. That is a byproduct. what I do is research and evaluate fundamental attributes of companies. If I do that well, the buying and selling take care of itself. So again, I'm just looking for good opportunities. And if I find the opportunity and the price gets right, then it's a top opportunity to buy. I don't like to trade all the time or very often. My typical hold time hopefully would be very long. So my goal is to analyze 3 stocks per day. That might seem like a lot, but it's really not that much that hard at all, because I decide very, very quickly that most companies don't work for me, and really only invest any time at all in 10 or 20% of the companies that I look at. So again, I try and analyze 3 stocks per day. Something like 80% of the companies I look at have so little appeal that I'm able to tell in just a few minutes that it's a dog and move on to some other research. I'm looking for really solid companies, and at least in terms of past performance, it's pretty easy to identify those companies quickly. In January, I was able to analyze 99 companies, which was about 3.19 companies per day. I found 13 companies over the course of the month that I would buy if the price was right. That is to say, they were solid companies. I'd like to own them for the long term. So about 13% of the companies this month met my standards. But of those companies, only 5 were cheap enough to be interesting buys. And by interesting guys, I mean they would be cheap enough that they even merited doing additional research. So my research totals, I've been actively working on this investment portfolio using my current model for 22 weeks as of the end of January. To date, I've analyzed 494 companies. That works out to 3.2 stocks per day. 98 of those companies were found to be solid companies, which is about 19.8% of the stocks. And of those 98 companies that are interesting, 24 companies are cheap enough as of today to consider buying at today's prices. But to be completely fair, I'm looking at this on February 5th, and that's after the big correction. The number of shares, January 31, as of this report, was probably in the high teens, the number of companies that were cheap enough to buy. So in any case, 4.8% of the companies that I look at are both attractive in terms of fundamentals and in terms of price. So finally, again, summary for the month. My stock investments are up 1.4% overall. 4 companies passed the 15% appreciation threshold and became long-term investments. 6 new companies were added, giving me 15 stocks in the active fund. My cash was reduced from 28% of the fund to 11% of the fund. I researched 99 new companies, found 13 solid firms that I want to track over time, and I found 5 stocks that are cheap enough to warrant additional research. So that's what I did this month. That's what I was able to achieve. I'll report back every month using similar information, and hopefully we'll be able to chart our progress over time. Thank you very much for watching.